Bitcoin. You've heard the name, you've seen the headlines, you've probably stared at those crazy price charts. But what is it really? Well, beyond all the hype, it's asking a huge question about the future of money itself. So, in this explainer, we are going to dive deep and figure out what actually makes it tick.
At its heart, you can think of this as a story about a massive challenger entering the ring. You've got this new, disruptive idea, a completely digital currency born on the internet, and it's going toe-to-toe with the financial systems that have been running the world for centuries.
But here's the thing. Just calling Bitcoin money doesn't quite cover it. It's way more than that. First, it's a groundbreaking piece of technology. Second, it's a totally new kind of financial asset. Some people are even calling it digital gold. And third, it has kicked off a global movement that's now so big, the world's most powerful institutions have no choice but to pay attention.
And that gets us right to the heart of it. How does a Bitcoin transaction actually work under the hood? It's probably not what you think. And maybe more importantly, what happens now that the giants of Wall Street and governments all over the globe have finally come knocking on the door?
Okay, so let's start with the absolute basics. To really get Bitcoin, you have to understand how it moves from one person to another. It's a little different.
The first thing you need to do is forget everything you know about account balances. Seriously. The best way to picture your Bitcoin wallet is to think of a real, physical wallet full of cash. You don't just have one single balance, right? You've got a bunch of individual bills and coins. In the Bitcoin world, those are called unspent transaction outputs, or UTXOs for short. Each one is a specific chunk of Bitcoin that you can spend, just like a $5 bill. So here's the key. When you want to pay someone, your wallet doesn't just subtract a number. It grabs some of your UTXOs, your digital bills. Let's say you need to pay for something that costs $15, but you only have a $20 UTXO. Your wallet sends that whole $20 UTXO into the transaction. It then creates two brand new UTXOs. One for $15 goes to the person you're paying, and a new one for $5 and change comes right back to you. Every single transaction works this way. Old UTXOs are consumed and new ones are created. It's a constant flow of digital cash and change.
So now that we have a handle on how it works, let's talk about why it has value. This part isn't just about cool technology. It's about a very powerful and totally unchangeable economic code. This is where that digital gold comparison really comes from.
And right here is where Bitcoin makes a radical break from traditional money. See, central banks can always print more dollars or euros. Miners can always discover new veins of gold. But with Bitcoin, the total supply is hard-capped in the code. There will only ever be 21 million, period. And the rate that new coins are made is programmed to slow down over time. This mathematically proven scarcity is one of its most powerful features.
Now, this slowdown happens through a really cool event called the halving. About every 4 years, the amount of new Bitcoin created gets cut in half. It's like a built-in economic shock to the system that happens on a predictable schedule. This process will keep repeating, cutting the supply of new coins down and down until the very last fraction of a Bitcoin is mined, sometime way out in the year 2140.
And if you look back, this event has had an absolutely massive impact. Just look at the first halving back in 2012. The price was hovering around $12. But after that supply shock kicked in, it was followed by an incredible bull run, with the price peaking over $1,000 about a year later.
And then the pattern repeated. The second halving hit in 2016. What came next? An even bigger, more explosive run that sent Bitcoin screaming into the mainstream when it nearly touched $20,000.
And you guessed it, after the third halving in 2020, the price just soared to an unbelievable new all-time high. Now, of course, past performance is no guarantee of future results, but you can see why everyone in finance watches this cycle so closely. A programmed supply cut has, time and again, been followed by a major surge in price.
That kind of predictable scarcity in performance was bound to get noticed. For years, Bitcoin was kind of a niche thing for tech geeks and small-time investors. Not anymore. The biggest names in finance have officially arrived at the party.
Just take a look at this number. Over $48 billion. That is the insane amount of money that poured into the new U.S. spot Bitcoin ETFs right after they got the green light in early 2024. This isn't just everyday folks buying in, this is a tidal wave of capital from the biggest players on the planet.
I mean, this chart says it all. The floodgates just blew wide open. Day after day, you saw hundreds of millions of dollars pouring into these things.
The launch of these ETFs basically built a brand new, super safe bridge connecting the old world of traditional finance to the new world of digital assets. And you can see institutional investors are stampeding across it.
So, with Wall Street now fully on board, governments around the world simply can't ignore Bitcoin anymore. But they aren't all on the same page. What we're seeing right now is this fascinating and sometimes totally conflicting global patchwork of rules and regulations popping up.
Over in the United States, the strategy seems to be a mix of two things: cracking down hard on the bad actors, while slowly integrating Bitcoin into the system. The ETF approval was obviously a huge step, and new accounting rules are making it way easier for big companies to actually hold Bitcoin on their balance sheets, treating it like a serious financial asset. Europe, on the other hand, is taking a totally different approach. They've gone all in on creating one giant, comprehensive rulebook for everybody. It's called MiCAR, the Markets in Crypto Assets Regulation, and the whole goal is to create one clear, consistent set of rules for the entire European Union. They're aiming for clarity above all else.
Meanwhile, you look over to Asia, and hubs like Hong Kong are in an all-out sprint to become the world's crypto capital. They are moving fast, licensing trading platforms for everyone, creating special zones to test out new innovations like stablecoins. It's a clear signal that they are embracing this technology and want to lead the way.
So, as we watch this huge global debate play out, it's really important to remember where this all began. This quote, it isn't from some article about Bitcoin. This is the actual message that its anonymous creator, Satoshi Nakamoto, permanently embedded into the very first block of the Bitcoin blockchain. It's a time-stamped reminder that Bitcoin was born directly from the ashes of the 2008 financial crisis, as a direct answer to the failures of the system.
Which brings us to the ultimate question we're all asking. What is Bitcoin's destiny? Is it a revolutionary tool for financial freedom? Is it just going to become another regulated asset on a Wall Street trading desk? Or, in the end, will it be seen as just a fascinating historical experiment? The final chapter of its story is still being written, one block at a time.